Welcome to Global Nexus. Please subscribe and hit the bell icon for more breaking updates. In October 2025, China abruptly canceled $1.1 billion in U.S. soybean orders, an economic earthquake for American farmers. The announcement came without warning, sending shockwaves through the heartland. For many, it felt like the ground had shifted beneath their feet as years of trust and routine were suddenly upended. Harvest was underway, but now the crop had nowhere to go. Silos filled to the brim, trucks sat idle, and the usual rhythm of the season was broken. Farmers who had counted on steady buyers were left scrambling, unsure of what to do with their hard-earned yield. Years of planning and hard work were suddenly worthless. The sweat, the long hours, the careful investments all seemed to vanish in an instant. For many, it was more than a financial blow. It was a personal loss, a blow to their identity as stewards of the land. The cancellation wasn't just a business loss, it was the collapse of a decades-old trade partnership. Generations of farmers had built their livelihoods on this relationship, trusting that the global market would remain open. Now, the trust was shattered, leaving uncertainty in its wake. Farmers watched as soybean prices crashed, their financial security evaporating overnight. The numbers on screens told a story of loss, one that would ripple through families, communities, and entire towns. The news spread fast, forums, texts, calls, each conversation deepening the sense of crisis. In coffee shops and over kitchen tables, neighbors tried to make sense of what had happened, searching for answers and support. This wasn't a tariff or a negotiation tactic, it was a slammed door. Shipments were turned away, contracts voided, and the usual avenues for hope and recovery seemed to vanish. The markets responded instantly. Soybean futures tumbled, wiping out thousands in revenue per farm. The financial hit was immediate, but the emotional toll would linger far longer. The certainty farmers relied on to pay bills and plan for next year was gone. Suddenly, every decision became fraught with risk, and the future felt more unpredictable than ever. The foundation of rural America had been shaken, and the future looked perilously uncertain. Small towns, already struggling, now faced even greater challenges as the ripple effects spread. The 2025 harvest became a harvest of anxiety, a season marked not by abundance, but by fear and unanswered questions about what comes next. For farmers, the canceled deals were a personal disaster. A year's work and investment vanished overnight, leaving financial plans in ruins. With prices plummeting and a major buyer gone, paying off loans was no longer guaranteed. Many faced the terrifying prospect of losing family farms, passed down for generations. Farmers had to choose sell at a loss now, or store the crop and hope for a rebound, each option risky and costly. Anxiety became a constant companion, overshadowing daily routines. Caleb Ragland, president of the American Soybean Association, summed it up. Trade wars hurt real people, not just economies. Farmers' voices grew desperate, pleading for leaders to stop using their livelihoods as bargaining chips. The crisis was no longer abstract, it was playing out on every family farm. The U.S.-China soybean trade has long been the backbone of American agriculture. U.S. farmers produce far more soybeans than the domestic market can absorb. Exports are essential. China, with its massive demand for animal feed, relied on the U.S. as its primary supplier. Billions of dollars in soybeans shipped annually, supporting jobs from farms to ports. When China stopped buying, the pain rippled through the entire supply chain. Truckers, processors, local businesses. The loss wasn't just a disruption, it threatened the entire rural economy. In a globalized world, a decision in Beijing can devastate a small town in Iowa. The stakes of this trade relationship couldn't be higher. China's cancellation was the climax of months of escalating trade tensions, but the roots of the conflict ran much deeper. For years, both nations had been locked in a struggle for economic dominance, with each side wary of the other's growing influence. In October 2025, on 2025, China took bold steps, restricting rare earth exports vital for electronics, imposing new fees on U.S. ships entering Chinese ports, and sanctioning a major U.S. chipmaker. These moves sent shockwaves through global supply chains, raising fears of shortages and price spikes. The U.S. responded swiftly. President Trump canceled a key trade summit, signaling a breakdown in dialogue, and threatened even more tariffs on Chinese goods. The rhetoric on both sides grew sharper, with each government blaming the other for the escalating crisis. Diplomatic channels closed almost overnight. Negotiators who once met regularly now found themselves locked out, as both sides dug in for what looked like a prolonged and bitter conflict. American farmers, already struggling with low prices, were suddenly caught in the crossfire. Their livelihoods became bargaining chips in a high-stakes game, with no clear end in sight. By targeting soybeans, China aimed directly at the U.S. heartland, a region not only vital to the nation's food supply, but also politically crucial in upcoming elections. The message was clear: no one was immune from the fallout. As trade volumes plummeted and uncertainty grew, the hope for a quick resolution faded. The trade war was entering a dangerous new phase, with ripple effects spreading far beyond the negotiating table. Farmers, once told to endure for the greater good, now faced the reality of indefinite market loss. Many wondered how long they could hold on, as bills piled up and futures grew uncertain. The political chess match had real devastating consequences for rural America. Small towns felt the sting as businesses shuttered and families struggled to make ends meet. In the end, the most important piece for U.S. agriculture had been knocked off the board, leaving a landscape of uncertainty and hardship in its wake. When China closed its doors to American soybeans, it urgently needed a new supplier to meet its massive demand. Brazil, already a major player in the global soybean market and America's top rival, was perfectly positioned to step in and fill the void. Brazilian farmers responded quickly, ramping up production and expanding their operations. Within months, Brazil was shipping record amounts of soybeans to China, taking over the market share that the U.S. had lost almost overnight. This rapid growth was made possible by significant Chinese investment in Brazil's infrastructure. New ports, grain silos, and railways were built or upgraded, making it easier and faster to move soybeans from Brazil's heartland to Chinese ports. For Brazil, this was more than just a short-term boost. It was a transformative economic windfall. Brazilian farmers saw profits soar, while U.S. farmers faced mounting anxiety as their biggest customer disappeared. The new trade relationship between Brazil and China was built on long-term strategy, not just temporary necessity. Lost markets are notoriously difficult to reclaim, and China's pivot signaled a lasting shift in global trade. Even if the U.S. and China were to resolve their disputes, American farmers would now face fierce competition for a much smaller share of the Chinese market. The American Soybean Association warned that these trade disputes don't just hurt sales. They cause lasting damage to relationships and America's reputation as a reliable supplier. The timing couldn't have been worse. U.S. soybeans are typically shipped right after harvest, but with China buying from Brazil instead, American grain piled up in silos and loading docks sat empty. With the critical export window missed, millions of bushels of American soybeans sat unsold in storage, putting even more financial pressure on U.S. farmers. The global trade map had been redrawn almost overnight. Brazil's green arrow to China grew bolder, while the U.S. connection faded, leaving American farmers on the sidelines. For many U.S. farmers, the season's business was lost, and the future of their livelihoods now hangs in the balance as they face an uncertain road ahead. China's move didn't just crush soybeans, it dragged down the entire U.S. ag economy. Corn prices fell as farmers considered planting more corn next year, risking oversupply. Wheat markets hit new lows, battered by global surpluses and a strong dollar. The trade war triggered a sell-off across all major crops. For farmers rotating corn, soybeans, and wheat, it was a triple blow. No profitable options left. The pork industry suffered too, with China's market closed and domestic oversupply driving prices down. Hog farmers saw profits evaporate, hopes for export recovery dashed. Only cattle markets bucked the trend, surging on unrelated supply issues. But for most Midwest farmers, that was little comfort. The overwhelming story, widespread financial distress, all from one massive cancellation. The ripple effects were felt far beyond the soybean fields. Facing disaster, farmers are storing soybeans, hoping for a price rebound. This gamble ties up cash and racks up storage costs, but selling now means certain loss. Farm leaders urge a return to negotiations. Escalation only deepens rural pain. Experts warn prices could fall even further with no new deal in sight. The 2025 export window is closed. Much of the year's business is gone for good. Some hope a Supreme Court ruling on tariffs could reset the landscape, but relief is distant. For now, farmers wait. watching markets and hoping politics will shift before their finances collapse. They're holding on, but they know they can't hold on forever.